So far we know different types of mutual funds. In this lecture, in a beautiful curve, we're gonna know what type of mutual funds has the lowest and highest risks and return. And we're gonna group them and tag them as, for example, conservative investments and then growth-oriented investments. I'd really like this lecture because this will give you a good idea of, okay, what's going on and which mutual fund goes where in the terms of risk and return. So let's get it done. Risk versus return of different types of investment funds or mutual funds. Let's have the figure here. We have risk in the horizontal arrow and we have return in the vertical arrow. Okay, let's have our line here. So with increasing risk, return increases. We said that they have a direct relationship. Now, in the previous lecture, we mentioned that which type of mutual funds has a lower risk and which has a higher risks. But in this lecture, I'm gonna show it and summarize it in a figure, okay, to have a better absorption of the content. So we said that the lowest risk between mutual funds are for money market funds. So money market funds has the low risk and low return, okay? The whole purpose of money market funds is safety of capital. Those investors who invest in money market fund, they are not looking to get capital gain. No, they just want to beat the inflation. They just want to put their money in, for example, GIC or T-bills and just beat the inflation, that 2%. They just want to gain 2% annually. They just want safety of capital, nothing more. No interest income, no capital gain, no. So these are for those who hate risk, the risk-averse investors. The second type of mutual fund that has higher risk and higher return than money market funds are fixed income funds. So those investors who invest in fixed income mutual funds are looking for steady income because fixed income funds have bond in themselves. What do the bond do? Bond have coupon payments. So every 6-month bond, for example, gives a payment and interest income. Okay, so the risk and return is higher than money market fund, and the whole purpose of fixed income funds is steady income. Now, the third type of mutual funds are balanced funds. So balanced funds have higher risk and higher return than fixed income funds and money market funds. What's the whole purpose of those who are buying balanced mutual funds? They want income and growth at the same time. Okay? Easy. The fourth type of mutual funds is equity mutual funds. Equity mutual funds have higher risk and higher return than the three previous types of mutual funds. What's the goal of those who buy equity mutual funds? They want capital gain and growth. What do I mean by that? I mean they want to buy, for example, a mutual fund that has a stock in it at $10, and when the mutual fund and that the stock goes to $20, they want to sell it. This $10 difference, this $10 capital gain is their goal and objective. Okay. And last but not least, commodity and specialty funds. These types of funds has the highest risk and highest return between different types of mutual funds. What are the objective of those who buy commodities and specialty funds? These are the type of investors who are looking for aggressive growth or speculation. Okay, those three first type of mutual funds, I mean money market funds, fixed income funds, and balanced funds, are good for conservative investors. And the last two type of mutual funds, which are equity funds and commodity and specialty funds, are good for growth-oriented investors. These are important terms you need to know. So, conservative investors invest in money market funds, fixed income funds, and balance funds, and growth oriented investors invest in equity funds and commodity and specialty funds. I think this was a very great lecture. We summarized everything in this lecture. Go crush the next quiz, and I'll see you in the next lecture.